All right, so today we're going to be talking about NZD-CHF. This is my short trade today. You can see I plugged it here in my free Discord chat, link in the video description. Forgot to post 1 hour of NZD-CHF, and I say that because I posted the 4 hour a second ago, because that's what I was originally had my eyes on. Here, 1 second. Yeah, so you see I said NZD-CHF bias is bearish. I'd like to see it move up into that level of resistance inside the fair value gap. So that was that 4 hour, but I figured, hey, we're coming into New York kill zone here, and it's probably not going to expand that far into New York kill zone. It could, but it's going to have to be really, really aggressive, and I just didn't see that happening. So we go to the 1 hour, and we got something interesting on the 1 hour as well. So you can see not a bad looking play coming up here. I know we have the 4 hour above it, and we will go ahead and shoot. And I'll go ahead and shoot my shot for a short to see if we can push this up in here. If I get stopped out, no problem. Focus, we'll go to the level a bit higher. I posted a second ago. So you can see I posted a chart, a 1 hour chart of NZD-CHF for a possible short play. So what are we looking at here? What are we looking at with this picture? Well, this is what? That is a key level of resistance, right? Remember, if you refer back to my video series on key, my series on support resistance, you'll remember if you watched it, whenever you have a level like this inside of a fair value gap, those levels become very, very, very sensitive levels. So they're usually respected immensely. So I loved seeing that inside of this fair value gap. That's a clean level of resistance. And then this, you might be wondering, what the heck is this? That is just a bearish order block right above that level right there. And so, yeah, that's what I was looking at on the 1 hour chart. And again, remember, larger time frame is bearish as well. And so, yeah, that was the result of that trade. Now, let's start on the daily chart here. So, all right, so I'm going to clear it off. So on the daily chart, this is 100% bearish on the daily chart. Why is it 100% bearish? Well, we originally had that shift in market structure right here. See how it broke this low? See this big leg lower right here? See how it broke that low? That's a shift in market structure. And that's a high probability shift in market structure. Again, I made a video on high probability shift in market structure as well. If you just search my channel, you'll find it. But what made it a high probability shift? Well, the fact that we had the fair value gap created on the shift. It was a really strong close below that level. That's a high probability shift in market structure, right? So we had that. Then we had our swing high level put in. 100% confirmed at this point. It's operating within a bearish market structure. It is bearish. The trend is bearish. We're trading with the tide. We're trading with that bearish trend. Okay. So that's what I saw on the daily chart. And I wasn't worried about this order block. I actually posted this the other day for your studies. I think it's what I said for bounce off this order block, and we got it. We got a nice little pop off that order block, and then it traded up into a premium before selling off. But I wasn't worried about that because it already violated that order block. It already violated that order block, and at this point, we're 100% in a bearish market structure. It's completely trending to the downside. So I wasn't worried about that at all. I mean, that's old news. I wasn't worried about it. All right, so let's go to the 1 hour chart again. So this is what we had as our level of interest this morning. See this level right here? This was actually Friday's lows, or Sunday's lows, my mistake. Sunday's lows, and so that's where we had this swing low level created. So that was a level of support, right? That was a level of support. Price failed to move lower past this point. That makes it a level of support. But what happened to that level of support during London session this morning? It just completely smashed that level, crushed it completely, demolished it, right? And we had an imbalance created on the break of that level, which means it was a very strong move through that level. It was not respected in the slightest. And when you have levels like that, support when broken becomes resistance. And when it's inside of a fair value gap, that's when those levels become very, very, very sensitive levels. They get respected a lot more when they're inside of a fair value gap like that. Okay. And then right above it, we have our bearish order block right here, which is what I had noted a second ago. So that's what I liked on it. I liked it. The larger time frame, as we've already stated, is bearish. We have our point of interest right here. This is our level of resistance. 1 hour is just completely operating within a bearish market structure as well. It's consistently tagging the lows. It's strongly trending to the downside. There's like no strength whatsoever on this thing. It's just getting beaten up relentlessly. So yeah, I ended up getting my entry during the New York kill zone. Now I'm not going to sit here and act like I just nailed the complete top on this. I didn't. My entry was at the 0.58400. So definitely didn't get the best entry on it, but that's due to like spread. If I would have had like my limit right here, for example, because I'm marketed in the day. Sometimes I'll limit in, sometimes I'll market in. I did mark it in today, and if I was to, like, say, for example, have my limit right here, you most definitely wouldn't miss that. You weren't getting filled if you had your limit like right on that level. Again, it's just kind of due to the spread. And whenever you're trading something like that's not like a major, sometimes you got to be a little bit more lenient because the spreads sometimes are a little bit wider, so you have to be a little bit more lenient with your entries, your exits. I mean, you don't got to, but if you don't, you'll most likely miss a lot of plays. So I saw that on the chart. We came up when we tested that level. That was good enough for me. I marked it in. My stop was still above this fair value gap right here. So remember, 1, 2, 3. That is your fair value gap in there, okay? And whenever you keep your stop is a good place to keep your stop is above the fair value gap. So I had my stop right above that 1 hour fair value gap, and my PT was one that came down. So this was like a 1-to-1. So because I know some of you might be thinking, well, if you target this low right here and you got filled right there and your stop is right here, isn't that like terrible risk reward? So it was 1-to-1 risk reward, because you also got to keep in mind what I have said. Like, what have I said before? Price typically will find its support around institutional price levels, right? It's not going to just stop most times. I mean, anything can happen, but the vast majority of the time, price isn't isn't going to turn around on the dime on like a really random level like 0.5825. That was the low of this price swing, 0.5825. That's an extremely random price point, okay? And I noticed that. I know that's the low. I know that's that level of support there, but that's a very random price point, okay? And what do we got right below that random price point? We have our 20 institutional price level. So, I mean, what do you think is going to happen? What do you think? If it's going to come down to that level, do you think it's just going to stop at 25 on the dime, on the penny, or on the pip? No, it's going to want to come down into that 20 level, because that's your institutional price level. And so that's what I wanted to shoot for. That's what I shot for. And again, because of the spread, I didn't like nail 20 to the penny. I got out on the 20 at 22. So I exited at 22. Because again, when you're dealing with pairs like this that aren't majors, the spread is it could be a little bit trickier to trade. Let's just say that, because the volume's not as high. It's not as trading as much volume as like the Euro or Euro USD, GBP USD, stuff like that. So you got to account that whenever you're trading stuff like this. So it was still 1-to-1 risk reward, which I'll take it. I mean, still overall, even though it's not the best entry, not the best exits, still overall it's a solid play. The setup was there. Everything was in conjunction. We had our larger time frame, bearish, operating 100% within a bearish market structure. We had our intraday time frames. We had intraday levels of resistance. We had a bearish order block right above that. Fair value got confirmation, strongly trending to the downside, a lot of strength to the downside. So still overall though a really solid play, and I'm really pleased with how I played that. And so yeah, so I'm gonna go over a few more things in this video. Like, I'm gonna go over ES as well. This was my only trade today, but I still want to break down that as well for some of the viewers that may trade ES, etc. Alrighty, so I posted this the other day, and I posted a few charts in here this morning as well on ES. So you can see yesterday I posted this. ES weekly just took out the old high, aka buy side liquidity. We're still bullish, but in a premium at the moment, so I'd expect a retracement next week within that range. Likely we'll get a Judas swing beginning of the week down into that range, then possibly look for a price to expand to the upside after trades, yada 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 yada. Right, so you can see that was that high I'm talking about. We took out that high. We're clearly bullish at the moment, but when we took out that high, we entered a premium marketplace, aka meaning short-term expensive. So I was expecting a retracement. And I said, look for a retracement down into this level. That's our larger time frame level. So as I said, you can look for shorts until we move down into that level. Then it would be wise to stop looking for shorts. So that's what we ended up seeing happen today, as you can see. And I said ES testing that larger time frame level of support. I posted the other day, bullish order block right now below this if the first level can't hold. So again, that's exactly what happened. We ended up selling off. Rebalancing a portion of this price action, and we came down and tested this larger time frame support right here. And so let's go to our chart now and let's break this down. So again, weekly, we took out that liquidity pool right here. That's where we entered our premium market, right? This was our larger time frame level of support. See this? What makes it a larger time frame level of support, by the way? The fact that it was a recent level of resistance, because it's a swing high. This is a swing high right here, right? And then see what happened on right here. Boom, we had a huge leg up higher, and we cracked that level with strength, with velocity. All right, we had a fair value gap created on the break of that level. Again, I sound like a broken record, but remember in my support and resistance series, what did I say? When you have a level like this inside of a fair value gap, that's when those levels get respected immensely. Okay, so we have a larger time frame level right here inside of a fair value gap, and we came down and we tested that level today, right? And somebody on Twitter today actually asked me, can I make videos on like larger time frame levels and stuff? It's really the same deal with your intraday. It's just on a larger time frame. Like if you watch my videos on market structure, you'll know how to trade within the larger time frame trend. And as for larger time frame levels, I mean, it's the same deal as lower time frame. It's just on a larger time frame. And these larger time frame levels, I'm telling you, these larger time frame levels are magic. I mean, they're respected so well, and you get such nice reactions off of these levels. So they're definitely worth noting. So like right here on ES today, we got it. And there's that order block, which we didn't test that today so far. We might retrace a little bit lower here soon. We'll see. But we had a really nice bounce off of that larger time frame level of support this morning. That's what we saw happen. So how could you have played this? This morning? Let's get into that. Well, let's see. 1 hour, nothing too interesting. We were operating within a bearish market structure all the way down here. On the 15 minutes where I saw it. So on the 15-minute chart right here, this is where we actually had that shift in market structure on the 15 minutes. See the swing high right here? We came down into that level. We tested that larger time frame level of support. We put in a little swing high level right here, and then boom, we get a break of that swing high level. That's a shift in market structure, a high probability shift in market structure. Why do I say it's a high probability shift in market structure? Because we have our fair value gap created and we had a strong close above that level, right? See that? 1, 2, 3. Oh, I drew that really crooked, but here, let me get it a little bit better. All right, so see that? That was your confirmation. You could have played that off the 15 minute this morning. After you got that reaction off that larger time frame level, again, there's that larger time frame level. You came down this morning, you tested that level, respected it, and rocketed off. Shift in structure, fair value gap confirmation. That's what you want to see. That's what you want to see. You want to wait. If you want to play it safe, that is. I mean, you could grab it as it's coming down. Again, like I said, these larger time frame levels are something magical. I mean, I'm sure there's ways you can do it without waiting for a reaction, but the easiest plays is to wait for that reaction off the level. And we had it right here. So then you could have grabbed that retracement right here possibly, or you could have grabbed this retracement right here, which is a little bit deeper down into a discount. You could have grabbed that right there, targeted these highs right here, maybe targeted these highs right here, or high of day, just depending on how you want to play it and how aggressive you are with the play. But yeah, I mean, that's a setup right there in front of you. That is a setup. Tested your larger time frame level, shift in structure, retracement into a discount, and then it took out those highs and took out those highs. So, I mean, that was the setup this morning on the ES. And I also posted something else. I posted this. So that's the 5-minute chart on the ES, and that's a 15-minute chart. So what I had outlined in these pictures was this is an order block, and then there's your level of your support as well, fair value gap. So that's what I posted this morning. I said ES possible long scalp play here, bullish fair value gap, bullish OB, and it did have a nice reaction off that level. Here, let me zoom out real quick, so you can see right here. This is where it was at. So. And like I said, you could scalp these plays as well. So I posted this as just a scalp play that you could have played right here. So for example, here was another setup I saw this morning, a really nice setup. Now it definitely didn't give that much follow through. It came up to this high right here, and that's where you created your equal highs, those really clean equal highs. But it came down this morning, traded into that fair value gap, tested your level of support, your bullish order block. And I mean, that's a scalp opportunity right there. Just that little swing right there, that little swing up, that was a scalp opportunity off of that this morning. Okay. And then obviously it pulled the rug, it came lower, it took out that sell side, and then it returned up to take out these equal highs right here. That's what we saw this morning on ES. And now it's just now at this point it's kind of a choppy mess. All right. And one more thing before I end the video, I posted it this morning in Discord. But for the free Discord chat, once a week I'm gonna be hosting a live teaching session. We're gonna do it probably every Monday inside of the free Discord chat. So if any of you want to join that, make sure I'm gonna have a link to the Discord in the video description. Make sure you schedule it or you click that you're interested in it right here, and then you'll be scheduled and I'll have you a part of the list. So make sure you do so if you are interested in those live teaching sessions. Okay. Again, the link will be in the video description. Doesn't cost you a penny. You just click it, you join, and you're good. I'm going to do it once a week, every Monday. And I'll probably be on mic about 9:00 a.m. Eastern time. Okay. So it's basically just going to be me breaking down my watch list, Forex, futures, and small caps as well.